Hello and welcome all. My name is Kruti and you're watching informative videos by Kruti. So our today's topic is on repo rate 6.5% and how does it impact common man? Means how does repo rate impact a common man? As you know that in every 3 years RBI increases repo rate, and recently RBI policy community fifth time they have changed repo rate, and which is increased by 6.5%. So how does it impact us? Does it affect our life? Yeah, by looking it does we have to take decision on our financial income. So in this video we'll talk about all this. So we'll discuss why RBI is reducing and increasing repo rates. Due to frequent changes, does it affect lifestyle of middle class people, and how does it affect by financially? So the central government is having control on our economy, where it will be going. So the central government plays two roles. They have two types of policy. One is fiscal policy, second is monetary policy. So the fiscal policy is made by finance minister and monetary policy by RBI. In fiscal policy, government funding and tax deduction is decided by them. And in monetary policy, RBI try to control in Indian economy interest rate and money supply. To do this, tools like CRR, which is cash reserve ratio, then SLR, which is statutory standing facility, then bank rate, then repo rate, which has been increased by 6.5%. Reverse repo rate opens market operation, etc. And from this active instrument is repo rate. So now we'll look what is repo rate. Repo rate is a kind of a interest which central bank like RBI gives commercial bank. Now, how does it affect inflation or GDP? Let's see. So, as you all know that Reserve Bank of India is our central bank which regulates our Indian bank. So, the RBI is the bank of all our banks. So, to control other bank, RBI uses some instructions, which is CRR and SLR. CRR means cash ratio. So all commercial bank on their total deposit, they have to keep some percentage in RBI bank as a security deposit. So this percentage is called CRR. So now the CRR percentage is 4.5%. Now we'll talk about SLR, means statutory liquidity ratio. All banks as per RBI guideline, they have to keep some asset as per liquid form like gold asset, cash government approved security. And this is kept in the form of percentage, and this is decided by RBI. So now CLR is 18%. In case in bank assets are found, and RBI imposes heavy penalty on banks. So all banks have to maintain this compulsorily. CRR and SLR, if you combine them, around 22.5% is locked, and rest money bank gives on loan, and they can earn extra interest on it. Sometimes RBI give higher amount of loan, by which their locked asset gets lesser than SLR profit. And to avoid penalty, they take money from RBI for short time period. So all commercial loan which are taken by RBI, they gets on three types of interest rate. One, MSF rate, then repo rate, then bank rate. MSF means margin standing facility. That rate is applied when bank take loan from RBI only for a day. Repo rate, that rate is applied when bank takes loan from RBI for short period of time, which can be 7 to 14 days. Then bank rate, the rate is applied which bank takes loan for longer time period. Mostly bank to fulfill SLR demand, they take loan for short time period. So that's why when bank provides you loan, it's directly or indirectly applied repo rate. In case repo rate increase, so on which interest rate people have taken loan, it also get increase. Loan interest rate increases, people tend to take less loan, and then there is less cash in economy, and as there is less cash in economy, then people and goods demand increases, and because of the GDP growth rate become less, and then inflation is also less. So to keep economy stable, most important thing is inflation should be in control. So now how does repo rate affects our financial? The common man has two types of relation with bank, which is credit and debit from bank. Credit means to take loan, which can be home loan, car loan, personal loan. So if repo rate is higher, then all the loans will be higher interest rate, and nowadays people prefer to take loan on same rate, and when repo rate is high, then people are unhappy with interest charged by bank. In case if you want to earn higher interest rate on your FDs, then you have to make many FDs with the amount you have with different tenure. So in case if you are in need, then you can take your less tenure FD, and overall you can get more returns on it. So I hope you are clear with the repo rate. I hope you like this video. Please do like and subscribe my channel, and also please share this video with your friends and family. Thank you.